All right, so welcome everybody for this weekly session on Proflex Macro Market Discussions. Our goal, I think, is again the same. We will look at the markets where we are today, and especially in the context of all the news, how market is reacting. Feel free to put up your questions and your comments, and we can continue this discussion and try to figure out what are the next step and where we are heading. So let me share the screen and we can get started on where we are seeing right now, like just an objective view of where market is and what to interpret out of it. So this, as I always recommend, you start from a longer term chart. And I think just before we started recording, we were talking about how it is still not like a as pessimistic if you look at longer term chart, right? We have dropped 10%. There were a few comments around that it's not like sky's falling. But on the other hand, I think we did discuss a couple of weeks back how we have been in a sustained bull run for a very long time since I would say when we in early 2023. And even before that, I think we had a huge run in COVID and we had a 2022 correction. And we were watching this green line, which is 200-day moving average. If you remember, we were concerned about the market going down and whether it will, and we had almost kind of concluded that it's always the case that we go and test it. And our question was whether this test will be successful. And as you can clearly see, this is exactly what happened. We failed the test, so market is not yet out of the woods. In fact, this really reduces the probability of a quick recovery. So what does it mean? Usually, when we go back and test 200 moving average, and if we go past it, we could have created a V-shaped recovery. So this is what we call V-shaped recovery. And as you can see, that V was failed. And today, with the PCE data, we are going to talk a little bit about it today. But basically, we have seen this fall accelerating. Very similar thing in NASDAQ, very similar chart, you can see. So I think the technicals do work in this case. You can see, even though NASDAQ itself did not really test 200-day, but we are taking the proxy, which is QQQ, where most of the money invests through ETF, that did test its 200-day moving average, and very similar chart to S&P 500. Now, what are the scenarios? Technically, I would say it has not yet made a new bottom in either case. So the next hope, optimistic scenario is we can make a W-shaped recovery. So just like we said, V-shape, there is something called a W-shaped recovery, which means we make a double bottom here, where market again goes down and finds value buyers, which is what happened around here. So next week again becomes crucial. While, as we mentioned before, it is definitely a very negative sign that we were not able to go above 200 moving average successfully. So that's what the charts are suggesting right now. And the hope is, I think they're entering the week when the April 2nd, when all the news flow will be happening. I think till now this week, all the expectation of tariff reversals were not. In fact, they got worse as the new tariffs were announced on finished auto products and so on. So market is kind of giving up in short term, while I think we are still waiting for the actual news date, which is the deadline as April 2nd. What created this accelerated drop today is the data which came out, which is the PCE data. And I have a few interesting points to make there. One thing is that, yes, it was higher than expected, but overall, I think it is pretty much, we are seeing, it is the trend. We are almost flatlining on the PCE, especially if PCE excluding food and energy, which is more predictable. And as we all know that food and energy are much more volatile. They have been going up and down, and in recent times, actually, food and energy are both down. So as a CPI, I think we might go in similar direction. But one thing which I noticed specifically is that the biggest jump in the consumer spending was in the non-durable goods. So this we have been already noticing that this can be due to front running of tariff, people trying to buy earlier than what with the fear of tariff. So it's this is exactly what I think even Powell was talking about in the last conference, that this kind of data one off is very difficult to predict. Another thing is that which people are worried about right now is the inflation, longer term inflation, it's a 5-year inflation or the next year inflation. And as you can see, we are in a kind of a fear mode. And this also tells you, usually when you have the fear mode, and if you remember in COVID time, when similar thing happened, people were like kind of stocking up a lot. Means there's a famous toilet paper issues and which we faced. All of us have seen that. So that can also be confirmed here that the people are rushing to, the expectation is that inflation will be much higher. So usually that is what's reflected in non-durable goods and goods. I think in general, the goods category. So what we are seeing here is that this expectation of inflation is also a kind of a sentiment issue. And one data point which I want to show is a political divide in this country. And this is very interesting, as you can see. Usually Republicans always used to predict higher inflation, and Democrats used to predict lower inflation. And since this whole, I think, tariff announcement, and since Trump took office, this is going in totally opposite direction. Now, this also tells us that who do you believe? Like, when we talk about soft data, and this is again, I highlight what Powell was highlighting earlier, that all these polls which market is reacting to have no meaning, because this is a divided country where some people believe the 1 year price change will be 6.5%, while some other think it is 0.1%. So it's more perception rather than hard data. And the hard data right now is also getting influenced, probably because of front running. And this is why I think a lot of these things are not being interpreted correctly in the market right now. So, and also it's a matter of uncertainty. Like when we talk about tariffs, when we talk about whether the tariffs will take effect in the current defined shape, which I think Trump is keeping the cards close to his chest. There is every day there is a new announcement. So that uncertainty is spooking the market. So that is where we are. And this is again the same cycle. I think as we say, there's a joke around, right? That every day means there is a new news around whether tariffs are going up or tariffs are going down, and that is what market is reacting to. So I think this is the state of the market. Unfortunately, it is not great for investors. I think as we discussed, even we did this session last weekend on how you can incorporate options into your trading so that you can cover some of those uncertainties. And as uncertainty is high, the VIX is high, and we are seeing the option premium being better. So you can de-risk yourself with those. But other than that, I think there is no real direction till we either start dropping more, make a new low, or if we get some news next week and we make a W-shaped recovery. So these are the two things we are again at a kind of a crossroads. Another factor is when we're talking about inflation being, a critical factor where people are expecting higher inflation, bond yields are still not showing that. Bond yields are actually showing, probably pricing in lower growth, probably pricing in some kind of a recession, but overall bond yields are going down. So it's kind of a contrast again on actual data versus what we are seeing in the public expectations. And also remember that even if this is like we are talking about longer term yields, so even if tariffs are inflationary, this will be one time, because whatever tariffs are established, let's assume, just like we have already seen 9%, 10% inflation post COVID. And that can definitely hurt the markets in short term. But 10-year yields are mostly tracking medium to long term expectations, which look like are still contained in terms of where market is seeing the inflation is heading. So overall, macro picture is pretty similar. Means we are not seeing yields rising. We are not seeing any other big changes. If you look at even the money supply, which is growing, so which has started growing again. So that is also we discussed a little bit last week that that is also a tailwind for the market. But right now the uncertainty is keeping the market low. Other than that, we can look at quickly on the gold, which is, I think, definitely continuing to grow, as we have discussed multiple times, means that how bullish gold has been. And now not only it is maintaining this upper channel, it's actually looking to break out of this channel now, which might actually accelerate gold's rise if we break out of this channel. So it's looking very bullish. Again, as we always say, uncertainty usually yields to these kind of like assets, hard assets, get a lot of attention. Bitcoin has again been keeping, this channel. It has not been able to break this channel, which is the downward channel from January. So it's technically still not, in a kind of a consolidation phase ever since we broke out below 90K, and now we have found this new range. And I think this triangle has to be resolved. Like there is a medium term uptrend, and January onwards, we have seen this downtrend, which is causing, I think, very much aligned with the rest of the market, because Bitcoin is still considered a little bit correlated to equity because of the money flow. But if you see here, it is still keeping very close to 200 moving average. It's not diverging like what we are seeing with S&P 500. And that is where I think it is still outperforming in general overall market since November. We did discuss a little bit of this last week as well. So this is the state of the market. I will open it up for questions if anybody has.
Raman, you showed a chart which seemed to indicate that consumer sentiment or inflation expectations is more a partisan story. Actually, if you go to UMH website, the write-up out there says that sentiment decline as well as inflation expectation increase is
Mhm.
bipartisan. It's independents, Republicans, and Democrats. Everybody's throwing in towel.
Yes. So the sentiment is down. I was showing the chart, which is the inflation expectation. So
Even
inflation expectation,
inflation, even inflation. The last paragraph out there talks about
Mhm.
inflation expectations, and I have it up on my screen. But essentially, they say that it's across the board. Even Republicans are thinking, and I agree with you because I've tracked it for my work for quite some time, and it switches, every
Mhm.
4 years. Whoever is in power, uh, people think, that way. But the concerning thing in the latest stuff is that it's Republicans, independents, and Democrats, practically everybody is responding that inflation is expected to rise and consumer sentiment is declining.
So no, I think consumer sentiment is a factor of uncertainty. So
Yeah.
definitely the case. I would say that uh, generally sentiment is down because of the uncertainty around tariff, which is kind of, I think, by design. They are not trying to declare, like, when they want to keep it a negotiation tactics. So they're not, and every day we are seeing something new. So this is actually the biggest overhang on the market. Now, what I was referring to is what are the inflation expectation, and there are two factors. One is, of course, the potential bipartisan, there is a partisan uh, change, like, somebody voting for, what Trump is doing is saying that we don't expect this to be inflationary. And this is more like a confirmation bias. I can go cross check again on the data because that's the chart I got. Maybe it might be changing again, but definitely thanks for flagging that out. We will check it out. But on the other hand, remember the other part which I'm also trying to highlight is, if the inflation 1 year down the line were supposed to really rise across the board, the smart
Mhm.
money is also not voting for it, because what is happening is bond yields are not rising. If you
Yeah.
remember, when in early part of this year, when there was actual concerns around inflation, the bond yields were 10-year yield was going towards 4.7%, or even the 2-year yield. So right now, the expectation for rate cuts are still there. So I think that is also a contradiction in terms of what is people sentiment versus what money bond market is suggesting. So that is another reason which I think we are kind of questioning this, like in terms of whether it's really more like a sentiment or there is a real inflation concern here.
Yeah. Yeah. No, thanks.
Yeah. The question I had was, so what if you see, I mean, there could be obvious answers here, but in a subtle way, what would you see that would make you feel that now we are in that macro downtrend? I mean, like the big bust
Mhm.
is unraveling and it's like that frog on the pot, right? You know what I mean? That
Yeah.
analogy people draw. By the way, with respect to interest rates, just a comment, with respect to interest rates being down, that could also be flight to safety, right? It could be consistent with the fact that the market may be in a downtrend and people are going to safety, so the interest rates come low because people are flocking into
Yeah.
treasuries. Please go ahead.
So I think, fair point. I would say today's reaction can be purely because of flight to safety, and that's what we are seeing in gold also. But on the other hand, we have seen that in general, flight to safety these days, especially worldwide, global money is not chasing U.S. Treasury, and it's mostly going into gold and other assets because of general lack of interest in, and this is why I think even Fed is doing QT tapering further or almost removing the QT because they are worried about liquidity in the treasury market. So let me say two things, right? One is that macro wise, we have discussed multiple times, the money supply is increasing, QT is going off. So all the macro factors are saying that it is in favor of the market. It is a favor of risk assets because we are seeing loosening money supply from China, from Europe. US is removing QT. So all macro factors are saying that we are looking at a loosening and a dovish market. Now, the uncertainty of tariff is definitely the overhang, which can get resolved, which can continue dragging us. Charts are showing that we are, in a kind of an indecision point, definitely not bullish at all. Means we have we talked about 200 moving averages, and it's not able to cross that because people are kind of more pessimistic. But on the other hand, we also discussed why, and this was again, I don't want to repeat what we discussed last 2 weeks, but this is like the absolute pessimism. Usually, we don't see huge crashes in absolute pessimism, and that is what I think another factor to watch out. Right now, market is very much short. If you look at the put call ratios, if you look at how much of these stocks are shorted, so this is also giving us, a kind of it's a matter of resolution. It's a matter of where we are. So that's my personal view. But of course, as I said, if this uncertainty continues and it starts impacting earnings, which is if the corporate stop spending. So I think one of the questions you had was, what will confirm whether we are, entering this bear market or not? I would say this earnings will be very critical because or especially not just earning, but for example, this whole market was standing on the AI trade. And if we see the actual change in spending from hyperscalers or anybody, if they start indicating that no, this uncertainty is creating the businesses to slow down in spending, I think that commentary can definitely impact the market much more. And as I said, in near term, we might just react to any kind of a positive news on tariff or any kind of trade deals positively. But in medium term, I think money supply wise, the yields wise, whatever we are seeing in terms of data, the hard data is not really pointing to any problems in the market other than the uncertainty. So that we need to be very clear about. Like there is none of the data which is coming out is showing that there is a problem. There is some slight increase in, I think, high yield. So I was also looking at the, as we always say, right? If there is really a concern, we also look at the spreads of the high yield index, which we are looking at. And that is also it's definitely rising from a couple of months ago, but it's not as bad as we have seen when the fear of recession were much higher in late 2022 and early 2023. So all these factors are pointing to a pretty much kind of a macro is still where it was originally. It is uncertainty and confusion, which is causing markets to currently dump, and they keep going down every time we see any slightest of the negative data. And today's higher PCE, I think we need to see whether it reflects into the CPI numbers, the actual, as we have discussed, the trueflation numbers or the food prices, energy prices are already pointing to a lower numbers in last month or so. So market is not yet showing any signs of concerns on inflation either. So those are the kind of things which will determine whether, I think, in next few weeks, as market sees where the tariffs get resolved, where the earnings start showing up for the first quarter, I think that will probably also create some direction move, which I think we will see the resolution happening beyond that.
Thanks.
All right. So let's take a few more questions if you have on the market, because as I said, we have this topic today, which was proposed by the community on the Bitcoin Treasury. So let's get going on that. Let me share the screen once again. Okay, so we have been talking about Bitcoin treasury as a, what is a Bitcoin treasury market? Like, like you must have heard the news that GME jumped into the fray. And I think there were a lot of questions around what is the future of Bitcoin as an asset class. So today, I think what we are reviewing here is the Bitcoin treasury growth over time and how the adoption is happening of Bitcoin. And this chart shows a pretty good view of, even in the last 4 or 5 years, how it has gone from like very very low interest, or like most of the funds, like for example there used to be this GBTC, which was one of the fund kind of acting like ETF proxy, and now we are talking about public companies owning Bitcoin, we are talking about governments owning Bitcoin, we are seeing the number of private companies and public companies holding Bitcoin is growing. So as of today, I think one of these trackers which we are tracking is like there are 172 entities, known entities, which hold Bitcoin in their treasury, and more than 90 public companies. When I say public companies, these are listed in various markets, most of them in US. They own Bitcoin. And then, of course, there are ETFs, which we always talk about, which have only recently started in last 1.5 year or so. Then the governments and private companies. And in terms of the size of Bitcoin held, you are seeing that we almost have like coming close to 1 million Bitcoin in public companies, while ETFs have grown fastest because they are making it easy for people to hold Bitcoin. And as we see, I think the number of Bitcoin, like in 3.11 million, is within this. And by the way, as you know, there are total about 21 million Bitcoin out there. So I think the question here was, what are the various companies? What are the opportunities? So let's spend a couple of minutes on that. In terms of Bitcoin investment landscape, you can divide them into 2 or 3 sections. One is that, of course, everybody knows the MicroStrategy, and now GME is entering this, which is where we call it as a debt leveraged BTC. What they are doing is they are creating layers of money. Like for example, they are creating convertible debt, convertible note, preferred shares, and so on, trying to bring the fixed income investors and using that to buy Bitcoin and hold it as a treasury, corporate treasury. In addition, there are certain Bitcoin miners, which is like Marathon, which is also doing the similar thing, but their model is slightly different because they also mine Bitcoin and they buy using these instruments. Then there is a totally different kind of a Bitcoin landscape, which is actually involved in running Bitcoin either as a miner, which are pure miner plays, or crypto platforms like exchanges and so on. And you are very, very familiar with Coinbase, and CleanSpark is one example of Bitcoin miner, which does. There are many such players out there. And third is treasury diversification, which is more like buying Bitcoin as a investment or as a kind of a diversifying away from US dollars, just like we talk about asset class diversification. So as I think one of the big players in this is Tesla, which did buy Bitcoin in the last cycle, and they're still holding a reasonable chunk of Bitcoin. And there was a lot of votes in process from shareholders. You may have heard about Microsoft, Amazon shareholders putting it for vote. The future vision is that any company which has a huge amount of cash, they should diversify into hard assets as a protection to inflation or protection to US dollar devaluation. So this is, I think, various landscape of Bitcoin holding companies, and we can discuss as the next step in this call. Overall, I would say the biggest growth is happening in the debt leverage BTC. The reason being, most of these companies are using this fact that many of the income investors, which is like trillions of dollars of investors, they are not able to expose themselves to Bitcoin ecosystem. And what they are doing is they are creating these debt instruments, which all the big pension funds or the funds which are only able to invest in income instruments are able to invest. And we can double click on that as we go forward. So I think there were a couple of questions while I was presenting, so please feel free to raise your hand. Or you can unmute. I have already clicked on that. So this was I think the discussion which came up as a suggestion. So I would love to understand what are the questions people may have on this topic. But in terms of, as we discussed, the opportunities
Quick
in the Bitcoin
question,
ecosystem.
Ramnan.
Yes, go ahead.
Sorry to interrupt. So just to be clear, treasury here would mean that, like, I guess maybe I don't completely understand this, but I'll replay it. Treasury here means that a company will, instead of holding cash, they will hold a certain amount of Bitcoin, and they might want to use that for transactions over time, or I guess what do they do with this? Like, what is the point of keeping Bitcoin? Like, in other ways, why haven't companies instead bought a bunch of gold in the past? Why buy Bitcoin now if that's the case, right?
No, that's a fair question. So let me put it this way. So first of all, what is a corporate treasury? Corporate treasury is when companies earn cash. There is a term in their balance sheet. It's called cash or cash equivalent, and usually they buy the U.S. Bonds, like treasury bonds, and that usually gives you 3 to 4%. This is called risk-free return, but that is called cash equivalent. That means you're holding USD as an asset. Now, as the ideas why people did not do gold, because doing gold was very cumbersome. First part is because gold is has a cost associated with safekeeping and so on, so it is not considered it was never a part of discussion in treasury assets. A lot of companies have invested, they create investment pool. There is history of companies investing into stock markets, or as you can already see, there is a lot of corporate VC entities nowadays. They do invest into private companies, they do invest into public companies. Nowadays, we see like even somebody like Nvidia, they declare their 13F, they act like a fund. So that is also kind of a treasury operation where they're investing into other companies. So I think most of the big companies nowadays, they do invest into equity. So equity is easier. It is like, it's an electronic form and so on, while gold is or was always difficult. So to answer your question, why they did not do gold, because gold was never appropriate or easy to invest in, while Bitcoin is now gaining ground because of the way people are using it as an inflation hedge. Especially with some of these companies like MicroStrategy, they have entered Nasdaq top 100 companies, like they're part of QQQ index now, just using Bitcoin treasury as their strategy. And they don't have any other viable business anymore, and they are a huge company now. So Bitcoin is coming into discussion, and more and more shareholders are asking for why not diversify the treasury into Bitcoin. This never happened before for gold, so that's why I would say probably it never gained traction.
Thank you. And then the purpose of treasury is to basically increase the company cash, I guess. Is that the idea? You preserve and increase company cash.
Yeah, I won't say to increase cash, to, let's say, diversify away. Like, as we say, if you are concerned about US dollar devaluation, when you don't see, why do companies keep cash? Usually because they don't see any better purpose. Like usually either they use cash to give dividend out, or they buy back their own stock when they don't see, or they just keep it in their reserves for future investments. There are multiple reasons why companies can decide to hold cash. And when they hold cash, they are basically trying to invest in it, or as they call it, this is called a treasury operation. Now, treasury operation can be very, very safe, like Apple, which only does US Treasury bond. They don't do anything with it. It can be little more adventurous, like companies which are doing heavy investments. Like even if you see Google, Nvidia, Amazon, these are companies which have very actively invested into venture style investment into private companies, startups, and so on. So there are different ways treasury management is done by companies. And within that context, now Bitcoin is being proposed, and more shareholders are asking for it.
That makes sense. Thank you for the explanation.
Yeah. I see a couple of other questions in the chat, which says, is it time to balance gold and BTC? What is the mental model between BTC ETF versus MicroStrategy? It's a fair question. So I would say, first of all, yes, definitely a lot of people are thinking of Bitcoin as a kind of a digital gold. That's the narrative, and that is the way people are thinking for future. This will become on par with gold as an inflation hedge. And the reason being very simple, that both come from a scarcity concept. The gold, why it was considered an inflation hedge, was the same reason, and Bitcoin is considered the same way. And having considered Bitcoin on par with gold, I would say ETFs are 1-to-1 like what usually existed with gold, where you could invest into gold ETFs. Similarly, you can invest in Bitcoin ETFs. The benefit of that is they are 100% correlated with Bitcoin as a price. Of course, you pay some 0.25 or 0.3%, depending on the ETF, kind of a fee annually, but otherwise they are day-to-day correlated. Now, when you look at MSTR and GME, these are more like leveraged play. The reason being, they are not buying 1:1 of what you invest in. They are basically a speculatory value, but we call it as an option value of the future growth of Bitcoin. So what they do is they issue convertible bond, which is convertible at a certain price, usually above the current market price. So in a way, they are selling to the bondholders, they are selling an option, which is a multi-year or a leap, you can call it a 4-year, 5-year option built into the this offering. And that creates a leverage effect onto the stock. And that is where I think MicroStrategy is using this as a kind of a new instrument where you can buy a treasury asset as Bitcoin, which is acting like ETF plus option value of where the future price can go of Bitcoin. And combined, you are betting on a single product as a stock, which is MicroStrategy. Now, I would say how to make a mental model is that whether you are willing to take that leverage, whether you are willing to go and risk the drawdowns, which happens, and the volatility. Either you can use it in your favor, as we have discussed multiple times, like volatility, if used correctly in your investment, using options and so on, can give you higher returns. And if not done properly, it can also be pretty risky. So understanding these products is more important than just considering them a straight proxy. So if you're new to these assets, ETFs are a straight way. If you are sophisticated enough to understand the pros and cons of these complex assets like MicroStrategy and so on, then I would say these are not bad products if used properly and if you understand the reasoning for it. And I would say it's a full session we can do on just MicroStrategy business model and how they operate, because it's not that straightforward. You need to understand all the pros and cons and what are the various concerns you may have investing in that. There are a couple of other questions. Now that GME is also in the game, is MSTR spatial anymore if everybody can do it? It's a great question. I would say that whether MicroStrategy has the first mover advantage, whether that makes them special, I think definitely not special, but as we said, the first mover advantage is crucial for two reasons. One is that they started buying Bitcoin much lower priced, so their average price of their assets is much lower. Like there's even now it's I think around 64,000 or 65,000 or so, and that gives them little more headroom in terms of how much profit they have made. Secondly, once you have a huge treasury which is already you own, you are able to issue much bigger leverage on it. Like for example, you are able to issue higher amount of debt on top of it, because ultimately the bond holder is looking at the debt to your debt to asset ratio and how risky it is, how much of a drawdown of Bitcoin will make them concerned for the viability of this company. Somebody coming in new, buying at this price, will have to build that narrative, and they have to be very carefully monitoring their debt to asset ratio. And that's where I think MicroStrategy has already taken a pretty big step in building up this treasury. So they will always have advantage. But having said that, anybody who can start with a big size, because unfortunately till now, no other big cash companies have done it. GME is actually potentially going at a big scale because they already own around $5 billion worth of cash equivalents. And now they already announced 1.3 billion of convertible bonds. So they're already going with a bigger size. So I think GME is definitely coming in hard on the tail of MicroStrategy. But I would say that there is no real, I would say as soon as the asset size can become similar, and if the race becomes, neck to neck in terms of asset size, then MicroStrategy may lose its first mover advantage. But till then, I think they are still the leader because of the size of their assets. The second question I see is that MicroStrategy is essentially a Ponzi scheme. What's the point of no return? I would say, okay, so this is a question means we have discussed multiple times, means in one philosophy is that all investments are Ponzi schemes, like whether it is a stock, whether it is, even gold, or even Bitcoin. Forget about MicroStrategy. Even Bitcoin itself can be considered a Ponzi because it's a matter of trust and belief. Now, once you are willing to agree that Bitcoin has a certain, demand supply dynamics, and there is a certain value you associate with it, you are willing to invest in Bitcoin. That is a primary starting point. Otherwise, of course, everything is a Ponzi. Now, coming to assuming Bitcoin is a fair asset for you to invest in, MicroStrategy becomes, as we say, point of no return at a price where all their debt becomes, is the value of their debt is more than the value of Bitcoin, which they hold. Because in that case, the common stockholder is last in line, as we can say, right? There's a seniority of the how you, let's say the company is going bankrupt because the debt is, they cannot pay their debt. Um, First of all, when will that happen? It cannot happen because most of the debt they are issuing is at a 0%. So there is no interest to be paid, other than the recently issued preferred stock or the strike and strike. They have two income bearing products where they pay dividends. Other than that, most of their convertible debt, which they have issued, is 0%. So those debt they don't have any problem servicing because it's a 0% debt, and they can always replace the debt with new debt. So that is not a question here. And the size of the dividend paying debt is pretty small. So none of those scenarios exist for next 3 to 4 years. So point of no return, as Michael Saylor has explained, only happens when you are not able to pay your debt and your debt is due. And if, let's say, 3 to 4 years from now, if Bitcoin is 75% down from here, and their debt is only covering, or the Bitcoin is only covering for the debt outstanding, that probably makes the value of MicroStrategy stock zero. But assuming Bitcoin is going through this 4-year cycle, and as the people who believe in Bitcoin believe that it will go up in long run, that issue doesn't exist for them unless they hit that point. So I would say, means again, I don't have the answer for it directly exactly at what price point, but that price point in my view is pretty low, where they reach a point of no return. Because the idea here is that they are able to, even GME, which came in now, they have been able to issue 2030 bond, which is 5 years from now, at a 0%. And plus they had a 35% premium on their current stock price for the conversion. So you can clearly see that people are willing to bet on the option value of Bitcoin going up in 4 to 5 year horizon. And I think that is where, if you call them Ponzi's, then these Ponzi's are sustainable because there is no real debt servicing issue here. Because that is the most innovative part of their strategy, that they are able to service or they are able to get this debt at a 0% interest rate, which is making this strategy more viable than alternate strategy would be, where you're taking loans to buy Bitcoin. So I hope I answered that question. So in terms of, I would say, what are the risks associated with it? As I said, it can be a much more deeper discussion. But overall, at this moment, the way they are structuring it, unless they go overboard with issuance of this dividend-paying debt, which they're paying 10 to 12%. So that is another scenario. Let me put it this way. So MicroStrategy has taken actually additional steps where now they have started issuing from 8 to 12% range a new debt, which is, we call it as a preferred stock, as well as the perpetual preferred stock and a convertible preferred stock. So there are two products they have launched. For that, they're on the hook to pay dividends quarterly. And if that dividend payments become more than the growth of Bitcoin, like for example, they're paying at 10 to 12%, and if Bitcoin price does not go up by 10 to 12% annualized in a medium to longer period, then people will start questioning the strategy more. And as we have seen historically, Bitcoin has grown way more than 10 to 12% per year. So that's, I think, where people are betting on at this moment.
So curious, if their 0% debt strategy was working, why did they get into this preferred dividend
Mhm.
stuff at all?
Okay, so that's a fair question. So let me explain you what happened. So when they first issued 0% dividend and Bitcoin used to be at 25 or 30K, and the conversion, usually those 0% debt is convertible bonds, which actually get converted into common shares. And common shares usually the conversion price is of the order of 35 to 50% premium. And as you know, Bitcoin went up 4 or 5 times and the MicroStrategy went up 10 times. So now there's a pressure on their common stock because when the bond get converted, that stock, the number of stocks outstanding increases. So it is still very costly. If the Bitcoin goes up another 2 to 3x, 0% debt is actually going to turn up very, very costly versus 10% and 12% dividend. Because in one case, you are basically borrowing money at 10% and you don't have to give any stock. In another case, even though you're getting it 0%, but you have to give your common stock at 35%. So you're diluting yourself.
Got
So
it.
it's a balancing factor between the two.
Yeah, makes sense.
All right. So let me just quickly check other questions. So again, as I said, we have multiple ways to think about it in terms of how to appreciate these assets. But I think we should also understand each of the companies being different. And it's very similar to when you evaluate a tech company, you need to understand the Bitcoin treasury companies as what are their pros and cons. I see another question here which says, how do you think the go forward prospects are for more treasury holdings? I think let's put it this way. It is slowly getting adoption. But as of now, so let me summarize. Where is the Bitcoin treasury company today? Most of the companies, whether you see MicroStrategy, whether you see GME, whether you see there is another one, I think Cymer or something, there are like at least 10 or 12 companies I have studied. All of them are those companies who had lost their business prospects. They were probably dying companies. They had some cash flow. They were milking their existing business, but they did not have any future. So the way they think about it and the way you should think about it is they are seeing that either they can just keep burning cash trying to revive their dying business, or they can convert themselves into Bitcoin treasury companies. That's what many of these people are doing. Like, and let's double click on why GameStop is doing it. Like they would have been dead, I think, 4 or 5 years ago. The reason why they survived is, or they generated this cash pile is because of all this, the Wall Street bets, which helped them pump the stock. It became a meme stock, and they raised a lot of money from the market. And to be frank, that did not help their main business. Like GameStop as a business model is dead. Means in the modern day, in the streaming gaming world, in the app world, means GameStop cannot survive as a business. So it makes sense for them, and they're sitting on $5 billion just because of the meme stock frenzy. So, and MicroStrategy has already shown them the way how you can do that. So, having said that, how do I see the prospects? I would say in short term, imagine every company which is kind of which was at one point making money. They have certain cash or cash flow. They have no prospects by investing into their business because either they became a dinosaur and somebody ate their business model. They have a viable path now. They have a viable exit by becoming a Bitcoin treasury company. So that is what is happening today. So when you look at Microsoft, Amazon, Apple, yes, it's a fair question because when you see the success of this strategy, people are saying, why are you not diversifying? Because they see this still as a risky business because they can still invest in their own business. They are still assuming that their board is assuming and that there is no need for it because they have a viable business path. So I would say at this moment, the growth will be purely in the companies which are not seeing the future. And now they are seeing this path. In terms of whether it will become viable, Tesla is only example, which was a growing company, which took the decision. And to be frank, it has benefited them. Like they bought around at around $40,000, if I'm not mistaken, and they're still sitting on huge profits versus holding the same cash at a 4 or 5% debt. So it is one example of successful investment in or treasury diversification. And as we are seeing now that the US government has formed a strategic reserve, as we see more and more government entities and more, I would say, respected entities are going to come into this mix, we might see these things change again. So that adoption will increase once it becomes a more respected way of dealing with treasuries. If I remember correctly, like 10 years ago, even investing in startups was not considered a thing which you should do with your treasury. Nowadays, it's become the VC industry made it very popular, and now you are seeing NVIDIA almost participating in every AI startup as an investment. This was not the case 10 years ago. So it's a matter of adoption. It's a matter of things like the one style of investing or one particular asset class becoming acceptable at a scale. So it's a normal adoption story, I would say. As long as we don't see any other structural issue on the Bitcoin investment theory, and if you believe in Bitcoin, I think this will only grow. We have not seen anybody who has completely who started investing in Bitcoin who moved away from it. Either it is individual investors or corporate treasuries. So I would say that it's only going one way up right now. Whether it will continue growing and whether mainstream companies like somebody like in Mag 7 will pick up Bitcoin outside Tesla, I think that is something which we have to watch. So, but I think these are good questions. Means I would say this was a pretty interesting dynamics playing out right now. And as we discussed, like even the governments or the even that almost 20 states in US have a bill in motion to buy Bitcoin as their treasury asset. So, and more governments are doing it. So once that becomes, you have to imagine that even if you're investing in a US treasury asset, and if there is some part of US treasury backed by Bitcoin, you are already part of that whole ecosystem. I think once they start realizing it, and I think that is one more thing to watch in this Trump administration, because they have made it very clear, even though the strategic reserve was formed with the mindset that they will not purchase using tax dollars, they are already talking about tax neutral ways of acquiring Bitcoin. And if that happens, and if they end up at any point monetizing that in terms of either a Bitcoin based bonds or whatever, there are a lot of ideas being discussed right now. I think that would be a turning point where more people will consider that if US dollar itself has a certain backing by Bitcoin, then why not? And that thought has been initiated, that discussion is already happening. So I would say that will be the last factor to completely make it a valid investment strategy for corporate treasuries. And I think one more thing which I would comment, if there are no other question, is the GME having no assets at all, having very limited, benefits coming as a new entrant, being able to place 1.3 billion convertible debt at 0% interest rate. That is, I think, pretty much eye-opening that there's a lot of demand for this product. Okay, so I say, what is the adoption of BTC by non-US treasuries? I can click on this. I think I don't have it in front of me. When you say non-US treasuries, none of the governments, I think the big governments have announced these publicly. We already know some smaller countries in Southern America and so on, like El Salvador was one of them. There were some other smaller countries, and we do know that there's a lot of rumors around China and Russia buying or mining Bitcoin. So there are a lot of governments which hold it as a seized asset when they any kind of illegal activity, when they seize it. There are many countries who have not sold it. The only one country which has sold all of their assets is Germany, which has sold all the Bitcoin seized in these operations. So there are some sort of treasury ownership in many governments. But I think this is more about whether there is actual, I think US buying any kind of acquisition of further Bitcoin and increasing this pile will trigger the next race across governments. And I think that will be interesting turning point, I would say. And as I mentioned, there are a lot of US states which have law in motion to propose buying Bitcoin as a treasury asset. I see there is a lot of interest in this, saying that we should do another MicroStrategy thing. Yeah, I think this is some of the people. So by the way, just to let you know, like, we have been running a lot of MicroStrategy and a lot of crypto option strategies in some of our products at Proflex. So if you're interested, we can share a use case or some kind of a, I would say, case analysis or some kind of a trade analysis of how it works. I think if you were part of our last Investor Day, I had presented one of the scenarios how the volatility was very useful in capturing returns, even when the stock does not go in your favor. So we did do a little bit of that in our last Investor Day in December. So we always keep sharing those details as from an education perspective. So feel free to suggest, and I think we can talk about it. But basic idea here is that most important part here is to learn about these assets before you venture into them, because while these are opportunities, they have their own risk factors which need to be understood. All right, I think we didn't realize today the time is already past, so we have 1 hour. So you can, by the way, the mic is open if you want to unmute and make any comments, or if you have any questions, we can take 1 or 2 last questions before we call it a day.
Is there a point in rather looking at ETFs, which are, a diversified crypto rather than Bitcoin, or is entire momentum and action only in Bitcoin?
Yeah, I think we did discuss this a few times. So my personal opinion is that Bitcoin is the only, clear asset class which has been identified as, which is kind of similar to gold or asset which is not, um, which has very clear dynamics in terms of token economics, in terms of scarcity. Most of other crypto, when you look at diversified, they are very kind of translucent in ownership. Like a lot of them are backed by some private entities, VC firms who do not declare their ownership. They sell it in open market. The regulations are not the same for most of the crypto. Like you do not have to declare insider selling in crypto world. And most of those tokens which were launched in crypto world were pretty much a lot of private ownership is there. And the kind of manipulation which happen on those is pretty much not something you can see. So that has created a little bit of challenge investing in those. So I do see those products being created where there are diversified ETF into crypto. In a bull market, everything goes up, so you can bet on it. But with Bitcoin ecosystem being so mature, if you want to leverage on Bitcoin, so in old days, people used to invest into other coins because they used to go faster, because the smaller market cap, they used to go up faster in a bull market. But now, even as we discussed the MicroStrategy, and some of these are already acting as leveraged play, you don't really need to do that with an asset class which is not very clearly regulated, or which has a lot of transparency issue and corporate governance issues. So Bitcoin is the only one which is, as we call it, as a fair distribution, because the way it was launched, the way it was, it is existing in the world right now. And that is my recommendation. But if you are following a certain ecosystem and if you like certain crypto, it's up to you. That is almost like doing the same research as investing in a startup. But I think the token economics of most of the crypto, which we have discussed a few times, is not very transparent, and that is the biggest risk in investing into those. All right, so I think we are at the top of the hour, so we'll call it a day today. Thanks for everybody for joining. It was a great discussion. I think do keep suggesting these topics. I think this was a good discussion. This came from our community notes on what you want to discuss, and we can maybe create this more diversified topics here in this call. And thanks again. Have a great weekend. Talk to you. Bye bye.